Hi, this is Joe Carapinha at BlueCrowTrading.com. I want to spend the next few minutes with you discussing element one, which is one trade at a time of the BlueCrow Trading Framework, which comprises the 13 elements of trading success. The element number one is the most important element of all 13 elements. And here is the BlueCrow Trading Framework. And isolated are each of the four individual phases. So there's a phase for the preparation of the trading process. There's a phase for the actions that you execute according to your trading plan. There are thoughts that are associated with those actions, and this is a third phase, and then the fourth phase is your release phase. And there are important feedback loops that impact each of these. As mentioned before in other videos, there are elements that are associated with each of these phases. For instance, the actions phase is associated with elements 3, 4, and 6. The release phase is associated with elements 5, 8, and 9, and so on and so forth. But element number one, which is one trade at a time, applies to the entire trading process, and what it suggests is that each of these phases over here and each of these elements must be aligned for every single trade that you're executing, irrespective of the market that you may be trading. And although it may seem cumbersome to be doing each step individually for each individual trade, over a period of time, once you've accumulated the skills to be able to do this, it will become second nature, and it'll be far quicker to move through each of these phases, provided that the elements are aligned to them and provided that you've acquired the skills and the knowledge to be able to do that. So what is element one, and what is it about trading one trade at a time? Well, it's a complete focus on the trading process. As a preparation phase, the actions or thoughts, and the release phase. And part of the process of preparation over here is self-awareness, and that self-awareness is is a process of determining where you are in your thoughts and your actions. And if you found, for example, that you may be exhausted at the beginning of a trading day and that you have not slept enough the night before, then it may impact your trading outcomes. If, for example, you are preoccupied with a personal matter that is consuming most of your thoughts and taking up a lot of your mental energy, it's unlikely that you'll be able to perform at your peak during that trading day. These matters and others that may be consuming your energy and your time should be addressed before you open a trade, and this is part of the preparation phase. And if you find yourself distracted by various things while you're trading, other priorities that you may have, then it's also unlikely that you'll be able to maintain the necessary focus to be able to execute your trading plan. And that's why it's crucially important in your preparation phase here that you develop and cultivate the space to be able to perform at your peak as you move through each of these four phases over here. The next step is to plan your thoughts and to plan your actions. And this includes having a well-researched trading plan that identifies what your actions are going to be, so that your trading setup and how you're going to be trading and your trading entries. It also will detail your trading exits and how you're going to exit, and that's why I've developed and I share on the BlueCrowTrading.com webpage the intraday targets for the NQ and the ES, which are designed to keep you in trades longer in order to maximize your reward to risk ratio. But your trading plan should also include things like what's your mission in trading, what your responsibilities are, what your daily routine is, what your daily goals are, and also your trading strategy. And you also need to plan to trust your trading plan. And although it may seem self-evident, that element of trust is crucially important, because very often traders will execute trades that look nothing like their trading plan, despite spending significant amount of time researching different trading setups and execution plans and integrating it in their trading plans, yet not sticking to that plan when they are confronted with the hard right edge of the trading screen. The one thing that you have to fall back on during times of stress and during times of market fluctuation and uncertainty is your trading plan. So you should definitely need to start trusting that plan and cultivate the necessary discipline to flawlessly execute the details included in your trading plan. A technique that I find very useful is to act as your own referee. I enjoy watching soccer, and when I have an opportunity, I'll have a look at the game, and I've taken on the role of the referee in my trading, and this is a personal experience that I've had. As you know, the role of a referee is to monitor the progress of the game, and what he does is allow the game to flow when it's operating within the rules of the game. What they also do is they issue yellow cards and they also issue red cards, particularly in soccer. Now, for the gentleman listening to this, I'm not thinking about these type of referees. Very pretty to look at. Certainly no credibility associated with it. Now, that's no insult to the female gender, because equally for the ladies that are listening to this presentation, I'm not thinking about this type of referee. Now, it may be that you would trust these particular individuals, and if you do, fantastic, that would work for you. But what I had in mind in particular was this type of referee. This is Howard Webb. He's a ref at the Premier League in the United Kingdom. He also refereed FIFA matches, and this is his record here on the right, detailing each of the seasons that he was a referee, the number of games, the total number of yellow cards that he issued, the average yellow cards per game, the number of red cards, and the average number of red cards per game. And if you glance across the averages per game over that season, you find that the average is fairly consistent. So starting at the beginning of assumingly the beginning of his career, but actually not. It's when the statistics were being collected, but starting at 2.23 yellow cards per game to low 2.12, which was his lowest over this period, to a high of 3.61. 3.72 was actually the high, no, 3.92 was the highest, but the average over all of that time has been 3.17. So that's been a fairly consistent record for the number of yellow cards that he's issued. And those are the marks of a good referee. Despite the number of games increasing over a period of time, and also the total number of red cards. But on average, these are the number of errors that Howard Webb has picked up in games that he has refereed for that time. And these are the number of red cards, so people that he has sent off the field. Averaging from 0.04 just as he started, going up to as high as 0.26, averaging 0.13 over that time. And again, fairly consistent over that period of time. Good to see that there are far less red cards than there are yellow cards. So Howard Webb has acted as a referee for the number of players that have been on the field for that particular soccer match. And taking this example and extrapolating that into a trading environment, the question needs to be asked is that if you were your own referee and if you were Howard Webb, how many yellow cards, these over here, how many yellow cards would you give yourself in a trading session, and how many red cards would you give yourself in a trading session? A trading session could be at any particular time that you may be trading, depending on the market, depending on the time zone that you're in. Part of this process of developing the skills of being your own referee would be to develop a system to associate some of your weaknesses that you have as a trader and weaknesses in the actions and thoughts you'd like to avoid with the types of cards. So for example, if you find yourself moving your stop loss during the day and in certain trades, despite your trading rules firmly stating that you should not, then it would warrant a yellow card. If you executed a trade outside of your trading plan, that too would warrant a yellow card. A red card may be when when you too trigger happy, for example, and you execute a revenge trade shortly after incurring a losing trade and jumping straight back into the market with no trading rules and irrespective of what your trading plan says. So if you give yourself a red card then in that instance, or you have two consecutive yellow cards, then you must stop trading for the day. No more trades. You're out of the game and you have not performed according to the rules of the game, and so you should be off the field. However, if you're operating within your trading rules, then you won't incur any yellow cards, neither will you get a red card, and you'll be able to endure the entire session. Developing this referee personality in you is quite challenging, and it's difficult to remain honest during times of stress. But in my coaching services that I provide through BlueCrow Trading, I propose to serve as your referee until you've developed the skill to self-coach yourself so that you'll be able to act as your own referee, preferably sooner rather than later. While we work together, I will take you through the BlueCrow Trading Framework and the 13 elements of trading success so that you're equipped with the skills to improve your trading performance. So that if you were the Howard Webb of your trading performance, you would be able to achieve these fairly low number of yellow cards and number of red cards in the trading sessions that you have per day and then accumulated over a period of time. So I've discussed the preparation phase, the actions, the thoughts, and I want to spend a few moments discussing the release phase. So in the final step of this trading process is the trading outcome, and the trading outcome can be positive or can be negative. You could have incurred a loss, or you could have incurred a win, which is great. But it's important here to ensure that the outcome of the trade does not impact your ability to execute the next trade without having the necessary clarity of mind and in accordance with your trading plan. So some of the techniques that could be used during this release phase to ensure that you are approaching it with that clarity of mind and in accordance with the trading plan that I just mentioned is stepping away from the trading desk may help for a couple of minutes. Practicing deep breathing exercises. These are comparable to those that are practiced by high performance athletes. Or writing down thoughts after each trade, be they positive or negative. For example, after each trade, you could create a new text document on your computer. Type in your thoughts as thoroughly as possible, be they positive or be they negative, because both positive and negative can have an unintended impact or consequence on your trading process. They should be positive thoughts or negative thoughts, because the idea is to prevent either from impacting the next trade. And this is this feedback loop over here. You don't want a positive thought to impact your preparation. That a positive thought being, oh, you've nailed this trade, you've generated a profit, you're very close now to achieving your daily profit target. So let's quickly jump into a trade and see what the outcome is in order to achieve it. Well, that positive thought, that feeling of and thought of invincibility may impact your clarity of mind and your process of independently assessing the next trading setup and taking that trade. So if you document these in a text document, then the next step is to delete the document. Yes, I said delete the document, and in the process of doing that, it's symbolically acknowledging that your thoughts are being cleared and preparing for the next trade. And in deleting that document, it's wiping the slate clean, removing those positive and negative thoughts before you move on to the next step. And acknowledging the thought that if they've been written in a document, then there's no reason to dwell on that particular thought ad infinitum. Unfortunately, some of those positive and negative thoughts will continue to dwell in our minds as we prepare for the next trading setup. This technique of writing it into a text document and then deleting it and symbolically letting go of those thoughts, I have found to be quite useful amongst a group of traders and also personally in my trading. If you would like to review what you've written during the day, then you could go back to the recycle bin and retrieve those thoughts and have a look at what you thought at particular points in time. So that is element one. I hope you found it useful. What we've covered in this presentation is the different phases, how the elements are related to those phases, how you could act as your own referee, and for a period of time I could support you in developing that referee personality, so that you would issue yellow cards and red cards based on your performance and hopefully eliminate them out of your trading game. So let me know if I can be of any assistance. I'm available through bluecrowtrading.com. Happy trading. Take care.